Folks, welcome to Stock Charts Today. This is Bob Desmond. It's been a few days since I did one of these commentaries. Pardon the microphone, I've been traveling and the microphone broke. I need to buy one today, but this will be the last recording I do with this junky mic. So my apologies in advance. So let's begin with the top headline this morning, and that is we have futures tumbling on new tariffs announced by President Trump. And I really don't think it was an official number. To me, it seems like it was more of an off-the-cuff type comment. And the markets have since rallied off the lows of the overnight session. So we'll go to those charts in a moment. The real number to watch today is going to be non-farm payrolls. Remember that last month we had a very strong number, one that could be construed as being inflationary. Yet despite the fact that it was a strong number, the average hourly work week and earnings did not increase. So I guess the law of supply and demand have ceased to exist in Washington, D.C. So we'll see whether or not they revise that number from last month downward. Now, if we get a strong number today, that might signal more Fed action. If we get a weak number, you may see the Federal Reserve sit on its hands. And with the tariffs becoming such headline news nowadays, you could bet that pressure will grow on Powell with yields rising now. We had a bullish reversal week this week so far on the 10-year yield. Members, we're going to segue into a strategy session immediately following Stock Charts Today. So stay tuned. We're going to segue right into the higher level view of the market and how we plan on trading it. So a quick look at the futures 4-hour chart. All of these charts will be 4-hour charts. You can see the S&P 500 is weaker on this session by about a percentage point. We have rallied back off the lows. We now have a reversal bar for this 4-hour period. Now remember, the other day we were down triple digits on the Dow futures, yet we reversed to rally higher. Please, I caution everyone, do not react on the pre-market activity. Don't go chasing this market one way or the other, or you will get burned. That's exactly what they want you to do. The last thing they want you to do is trade the charts. They want you to trade off of emotion. And in a market like this, it requires patience. Patience to wait to see whether or not the market breaks or does it have the strength to rally. And that's primarily one of the number one reasons why I see traders lose money. It's that they feel compelled to trade. Do not feel compelled to trade. Watch the market. Take the pulse of as to which way the market is going to break and then trade in that direction. Let's take a look at the Nasdaq. The Nasdaq, a very similar chart as to what we're seeing on the S&P 500. However, it is down more than the S&P 500, down 1.19% on the session. A bearish reversal bar. Let's take a look at the Dow. Okay, and the Dow is down slightly over a percentage point. A bearish reversal bar. You can see that we had a strong session on Wednesday, Thursday, but then on the news of the president's announcement, the futures market took it on the chin and hammered hard. But we left the day a bit overbought relative to the 2 standard deviation Bollinger Band. Let's take a look at the dollar. Now the dollar has had a really extraordinary rally. You would think that with all the news, the headline news that has been out there with tariffs, trade wars, etc., that the dollar would be under pressure, and it hasn't. It's been rallying. The problem for the dollar right now is that we have a potential for, this is only a 4-hour chart, so it's volatile, a potential for a double top here at resistance. We're holding on to the 90 level. It's psychologically critical that the Dixie, the DXY, closes the week out above 90. If it fails and we close down below the 90 level, that would be a technical breakdown on the week, both psychologically and technically if you're using the charts. But right now we're consolidating, we're holding gains, and what has been really strange is that gold and the dollar have been somewhat correlated, but that correlation is pretty much now over. and we are reverting to the norm, which is when you have a strong US dollar, you have a weak price of gold. And I really need to revise my statement here, because it's not so much the correlation of gold, it's been more the correlation of the gold miners. You could see that they've been holding up better than the price of gold, despite the fact that the dollar has been strong. For the most part, we've been in a trading range this week, whereas the price of gold has been under pressure. Now again, we do have non-farm payrolls coming out soon. Now let's get to member stock chart requests. This is where I review the symbols that our gold members submit for me to review. First chart up is going to be Costco. Daily chart. We have a daily breakout on Costco. We have Stokes, which are breaking out. We have RSI, which is flirting with a breakout above the 50 level, but not quite yet. So this is our second consecutive day above a breakout point. I'd like to see a third. That's the 3-day rule. Volume has been light. So Costco is setting up as a potential long. I like the setup here. Let's keep this one on our watch list. Deckers, daily chart. We broke out yesterday above resistance, a clean breakout too, meaning it broke out on volume. So we have conviction supporting the shares of Deckers. Now we have Stokes, which are rising. RSI has broken out above the 50 level. Looking good here. I am liking Deckers. As a long, I would use a stop right below yesterday's lows on a closing basis, meaning if we appear poised to close down below yesterday's lows, I would be out of the shares. Yesterday's low was 91.45. Tesla. I spoke about Tesla earlier in the week. I mentioned that we would get a rally. The charts were implying as such. We had bottoming action. And sure enough, we have since rallied. A very strong rally off the lows and on volume. Would I buy here? No, not yet. We need to see a pullback on Tesla, and not just a small pullback, a pretty significant pullback, because we want to retest the lows. And it may not be necessarily that we come back down and retest 244.59, but we at least want to get a higher low. And then perhaps we'll nibble on the shares at that point in time. We still have Stokes trading down below the 50 level. RSI is above 50, looking good, but I wouldn't buy here. Volume outstanding. So you have institutions picking up shares. Amazon, daily chart, no shock here. It's a similar chart as to what we saw on Tesla. A consolidation, a bullish reversal day. Yesterday we rallied. I think that we're rallying up to 1475 to 1498, and then we're going to see some real serious resistance. Volume yesterday was about average. It was nothing special. So I would not go chasing the shares of Amazon here. Too much risk, not enough reward. Facebook, daily chart. I don't like the setup here. We consolidated. We rallied yesterday, but we closed off the highs of the day. So take note of prior resistance last week and this week. All these topping tails right at the highs of where we were yesterday. So what does this tell us? The chart is telling us to update our chart and draw your resistance level to memorialize where we are finding sellers above. And the last thing that we want to do is go buying into where there are sellers. We had resistance here on the 27th, support on the 20th, support back in September, but that support level is now resistance. I would not be a buyer of Facebook until we manage to close back above resistance, or if we pulled back, retested and held recent lows, one of the two. But I would not buy right now. PayPal, daily chart. We rallied yesterday. We'll probably continue to rally up and into the 50-day moving average, which is unfortunately declining for longs. Now, yesterday's price action also very similar to what Facebook told us, the chart anyway, told us to do. Take your crayon out, and here you have it. So yesterday, we rallied right up and into resistance, and we sold off. Now, oddly or not so oddly, for those who are familiar with technical analysis, you'll note that this was prior support back on March the 26th, support back on February the 15th. Support back in March as well. That support level is now resistance. So I would not be a buyer until we manage to close above, say, 77.25. Volume was good yesterday. So PayPal remains a watch right now. Members, let's segue into a morning update. Let's discuss strategy for the day. We have the non-farm payrolls coming out. And I'll be working later on today on the week ahead commentary. Gold members, make sure you put your symbols up for review, stock chart request. The week ahead commentary will be coming out on Sunday, and that's where we discuss our strategy as we proceed into the coming week. We firmly believe that you must have a strategy prior to the opening bell each Monday morning. Members, let's segue now into a quick morning update. Members, let's kick this morning's update off with the weekly view. It's Friday morning, obviously. Weekly view of the 10-year yield. Remember last week that the 10-year yield had broken down below critical support. This week, at current, we are back above that support level, and in fact, we are breaking out on the 10-year yield. Remember, we had a yield of just shy of 2.94, and that's when the market began to buckle. Now, with regard to the Chinese trade war, I'm not so much concerned about China's response vis-a-vis trade. They have more to lose than we do. But the Chinese, who are our bankers, if they decide simply not to show up for an auction, a treasury bond auction, could send yields higher. Unless, of course, the Federal Reserve is going to come riding to the rescue. Now, I would call that maneuver by the Chinese the nuclear option, but taking a look at the 10-year yield, it can't be discounted